From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, I'm Daniela Coulier and welcome to the COB. Well, what a market we have had. We had such a strong lead from Wall Street, but unfortunately, the Australian market did not maintain those gains that we saw at the start of trade. So looking at the CBO 200, it looks like it's closed down around 5.3 points or 0.4%. And the ASX 200 is off by around 22 points or 0.3% at 6,954. And really it was a case that I suppose the markets are taking a more cautious turn. And of course, after the close in New York on Friday, we did have the Moody's downgrade of the US. But let's look ahead, or let's look at the three themes today. And the first is a data deluge. This week is literally one of the biggest data dumps I think that we're probably going to see this year. Looking at Australia, we have both the wage price index coming out on Wednesday, unemployment data on Thursday. We have a big China dump on Wednesday in terms of data. And of course, everyone will be looking to the United States tomorrow, Tuesday, because Tuesday their time, they will have their US CPI reading for the month of October and followed up by the PPI. But there is a lot more than that. So everyone will have to be tuned and ready because no doubt there could be some volatility. Now, the second theme, smoked shorters. Well, couldn't help myself because Elders today was up by over 16%. Now, the company's results, it's not that they were that swish, but clearly they were better than expectations. And shorters were left scrambling, trying to cover their positions there. Also, oil on the up. Is it or isn't it? So OPEC is going to meet this week and we have Iraq pushing for a further cut in terms of the exports for the major energy producers in OPEC+. But we also have a meeting between President Xi Jinping and President Biden in the United States. So energy, the prices might go up, or then again, they might further weaken as the outlook for global growth potentially slows. Now, let's just check in with the sectors. Here we have energy. The main downward drag here was Santos off by over 2%, Ampol and Viva Energy in the green, but Woodside off by about 0.8% and Beach off by about 0.3%. Now, the financials were dragged down lower by ANZ, off by almost 3% to $24.77. They reported earnings today, which clearly disappointed the market. Commonwealth Bank and NAB traded higher, particularly NAB up by 1.6%, Westpac off slightly, and Macquarie trading ex-dividend. So don't get too concerned if you see the shares off by about 2.4% to $158. Now let's have a look at the utility sector. A bit of a mixed picture. Mercury NZ up 2%, Infratel up 1.3%. Just worth noting that the Australian Super is going to vote against the Origin takeover. Let's check in with some of those top stories of today, because the first one, if we have a look at some of the share prices, Elders, as I said, reported a 38% slide in full year net profit to just over $100 million on a 4% slip in revenue. And the company has flagged that there will be some headwinds into full year 23. Also, it declared a final dividend of 23 cents, but markets are clearly liking that and shorts not liking it. Boral, meantime, they are up about 5%. They were up over 6 to 7% earlier. They've upgraded their full year guidance to between $300 and $330 million. The company is confident that the customers will continue to absorb price rises and costs are under control. Now, ANZ, as I said, profit taking today as its full year cash profit missed expectations. So that's despite jumping 14% to a record $7.41 billion. and net interest margins rose to 1.7% from 1.63, but they are looking to be under pressure in the year ahead. A final dividend of 94 cents a share was declared. Now, one of the big losers today was TPG Telecom, which has pulled the plug on a $6 billion bid to buy out rival Vocus Group's non-mobile fibre assets after the parties failed to agree to commercial terms. So that stock off by almost 11%. And Ramsay Health Care and Sime Darby have finally put the ink on the deal to sell their hospital unit to Columbia Asia Healthcare for just shy of $2 billion. And the market really just, I suppose, pretty sanguine. The stock was down 2.4%, and also Ramsay forecasting net profit after the sale to be around $630 million. So, stock of the day was Boral, and our guests on the call were David Lane from Ord Minnett and Daniel Ortizi from Lincoln Indicators.
Positive announcement for the company. As far as valuation is concerned, we think that they're relatively expensive, so we've got a hold recommendation on them at $5. They're probably a bit above where we think they should be. Our analysts' fair value is $4.25, but hazard a guess that perhaps they'd be looking at the announcement today and may make an adjustment to that. But at this point in time, I've got a hold recommendation on it.
From our money, we're probably finding better opportunities elsewhere at today's valuation, but I still think it's warranted to have on the watch list, because that margin story and the fact that they've been able to push prices higher, it probably does lead to a better business overall going forward for Boral.
Okay, so if you owned it, would you hold it?
Yeah, look, I think there's a case for holding it, certainly, and potentially as the balance sheet improves, capital management initiatives going forward, that'll probably be a positive for the company.
Okay, so our two guests weren't that upbeat about Boral, feeling it was either a hold or better opportunities elsewhere. So let's welcome our guest of today, Josh Gilbert from eToro, joining me on the COB. Josh, that Tash is looking pretty smart now.
It's getting there, Danny. It's getting there. Like I said last week, all for a good cause. If it makes me look silly, it is what it is.
No, it's not. I think you're looking very Clark Gable, but you might have to Google that one. So, Josh, we're not feeling the love down under at the moment when it comes to the share market. The US S&P 500 up 5% this month. NASDAQ 100 up 7%. They've had the best rise in over 2 years. And the Aussie market just can't catch a trick at the moment. What's going on?
Well, I think we're at completely different ends of sort of these tightening cycles. We've got sort of the Federal Reserve now who are, kind of pointing towards that they're finishing. I know Powell sort of tried to sort of dampen that sentiment a little bit towards the back end of last week, but they've got sort of rate cuts priced in by as early as sort of May, June, whereas the RBA have just sort of restarted their hiking cycle with obviously another hike last week. Again, unlikely that we see another hike from them in December, but I think the market is still expecting something else. I think they still think that the cash rate could go to about 4.5%. So the market, I think, is obviously taking that, and it's obviously on the back foot because of it. And as well as that, we're just obviously getting a bit of poor data as well from the likes of China, which is obviously having a big effect on some of those names. Oil prices, having a big effect on the energy sector, and obviously financials as well, like ANZ today, not really performing. And when you've got such a big weighting to obviously those financial names, it's obviously going to have a bit of an impact. And when you've got the Magnificent Seven doing what they've been doing in the US over the last sort of couple of months, I think they've made for almost 90% of US stocks gains this year from the S&P 500. So unfortunately, we don't have those sort of seven giants to sort of do the heavy lifting for us.
Yes, the rest of the world doesn't have them either. So they're in the same boat. This week, it could potentially be the week that we see quite a lot of volatility coming through with this massive data dump, or data deluge, as I called it. Do you think as we go in the run-up to the debt ceiling negotiations on Friday, with all this data, particularly US CPI, do you think we could see a bit of profit-taking move into the US markets?
Yeah, I think so. I think that's fair, given, like you say, as the sort of the risks, I think, coming into this week. You've got US inflation figures, a lot from China, Obviously, that sort of government shutdown potentially. Again, markets I think have ignored this sort of so far. I think, at times, this has sort of never really had a huge effect on markets. I think that's because investors have assumed that we'll get a sort of a speedy resolution, and it doesn't necessarily have sort of long-lasting economic damage. But then when you sort of throw in some of those other big events this week, like US inflation, I think we've got more than 20 Fed speakers this week as well. There's the potential for volatility to pick up. And I think also, I think there's probably more risk here that the markets end up on the back foot rather than on the front foot here. So wouldn't be surprised to see a little bit of profit taking, especially after we've had such a good recovery, if you like, after what was a really poor sort of 5 or 6 weeks from the S&P 500. I think, probably US inflation and the Fed speakers, I think, are probably going to cause much of that volatility. Again, I don't think US inflation is probably going to show anything too unexpected. Expected to see declines in both headline and core, but I think we're going to get that stern tone from Fed speakers that we've had from Jerome Powell in the last week. I think ultimately they're not going to want to let markets sort of run away and undo sort of the good work that the Fed have sort of already done. And like I say, markets for now are pricing in that rate cuts are on the horizon, but there's no chance that many of those Fed officials are going to allude to that anytime soon.
By inference, just listening to what you're saying, we might see a backup in US yields as well if we do get such a hawkish rhetoric. And it's just interesting because Ed Yardeni came out and he has said over the course of the weekend that because yields have come down, he's put 4,600, the target on the S&P by year end, sees that as possible, and also 5,400 next year if yields stay down. So listening to what you're saying, really, it does come down, do you think, to what the bond yields do?
Yeah, I think so. And I think from our perspective, we don't see much further upside from here from yields. We think that the markets are going to be in for a sort of a stronger year end. Last sort of couple of months we see as sort of being sort of pretty positive, and that is simply coming from the fact that we believe that inflation is continuing to move in the right direction. The US economy is sort of slowing, but it's this is not moving towards sort of a recession. It's a healthy sort of slowdown that we're sort of seeing, and ultimately that is going to mean that the Fed have the scope to sort of cut, and that's sort of the reason that we are positive on US stocks heading into sort of year end. And I think we've got a lot of positivity as well from earnings season as well. It wasn't just the Magnificent Seven that delivered more than sort of 30% earnings growth, but more broadly, we're starting to see the sort of the earnings recovery sort of come through. We've had this sort of earnings trough, and I think that's really positive for sort of markets. But yeah, as you say, we don't believe that the yields have much higher to go from here. We believe that they have already sort of peaked by now, and we struggle to see it sort of going much higher than where they have been.
So for investors, should they still be looking to add to their US stocks if we see a pullback this week in anticipation of further upside moves in the Santa rally?
Yeah, look, I do think that Santa's going to have his bags packed. Chancellor and all the other reindeers are going to be coming in full force. No, but look, I think that I think there's some positivity, as I say, going into year end, and we see any weakness across real quality stocks, especially across those Magnificent Seven, as an opportunity. I think that yes, some of those valuations are high at the moment, but we think that those sort of valuations, their premium valuations, are sort of justified by the returns that they're delivering, but also sort of the earnings recovery that we're seeing from them. They are leading this sort of earnings recovery, and I think it's sort of justifying some of those valuations. But yeah, I do think that given that sort of macro backdrop that is improving, it sets it up for any weakness, I think, as opportunity. And I think we saw that just in the last sort of couple of weeks, where I think it was a week's worth of gains that we had from the S&P 500. The S&P 500 was up more than sort of 6%, basically reversed all of the losses it had over sort of 6 or 7 weeks. So I think that shows the importance of sort of being invested in markets, time in the market over trying to time the market, if that makes sense. And I think that's really important, because you can miss some of those, the best days in markets by sort of being out of them. And I think there is always something to worry about. But for now, we see more positivity ahead rather than risks that are going to be affecting this market.
I like that. I have a distinct feeling. I'm not sure whether Santa might miss Australia this year, sadly, if we get another rate hike in December. But hey, that's a conversation for another day. Josh, thank you so much for joining me today on the COB.
Thanks, Danny. Take care. Have a great week.
You too. Okay, Josh Gilbert there from eToro. Okay, so now it's time to check in with some of the movers and shakers and the not so movers and shakers on the market today. There we go, the leaders. Well, no surprises, Elders up almost 17% as we see that short covering. Boral, also the market liking the upgrade there, up by almost 5%. Imagine, well, that one was on a tear last week due to some positive trial results going forward for their biotechnology, and that is up almost 5%. Also AUB up 2.5%, NIB some broker upgrades coming through there, that was up 2%, and that is off the back of the AGM comments. Let's have a look at some of the laggards in today's trade. TPG Telecom taking the mantle there. As we've discussed, the Vocus deal has fallen over, off by almost 11%. Sierra Resources 10%, Sierra off by 7%, a Brain Chip off by 6%, West African Resources and Chalice Mining also off by just over 4%. Now I'll have a look at the small caps and let's see what's happening in that space. 4D Medical, my golly gosh, that is up 65%, and I seem to have missed that one, so I'm going to have a quick check to see if I can find out for you. And while we look at that, we have also Arizona Lithium up 17%. Interesting, Ainsworth Gaming, just that they are in talks in terms of achieving potentially they're looking for someone to buy them out. Now, just looking at 4D Medical, so so US Centers for Medical and Medicaid Services, CMS, approves reimbursement for 4D Medical. So they have assigned $299 million. I think it's $299 as a reimbursement for their LVAS treatments, so their scans. So clearly that is very exciting that they will actually get insurance coverage, healthcare coverage for their scans. Then we've got Reef Casino up 8%. Now let's have a look at the laggards in the small caps. And a 5E Advanced off 14%, and Victus Energy off also by about 14%, Big Tin Can off by 11%, and Iris Metals off by 8%. Now let's check in and see what is happening overnight, and actually not much is happening overnight. So all the news and action will start Tuesday evening our time. But for tomorrow, we do have quite a lot in the day ahead. We've got the NAB Business Confidence for October, the Westpac Consumer Confidence for November. We've got a couple of really big AGMs, Goodman Group and Beach Energy. Earnings for ALQ, CAT and CBA, I'm not sure about that one. And most importantly, NAB is going to go ex-dividend, and the Telstra Investor Day is coming out as well. So let's do a quick recap of the market, and as we can see, the CBO 200 is off 5 points, 0.4%, and the ASX 200 was also closed down by 0.4%, 27 points to 6,948. So also a reminder, registrations are now open for our next virtual investor event. Small Caps, Big Ideas is back for 2023 and will be bigger, better and faster. If you weren't a subscriber in previous years, we bring together 10 of Australia's leading small cap fund managers to each present one high conviction idea. And this year, we're throwing in a Fast and Furious, a special edition of The Call featuring micro caps chosen by you. Register to watch live or on demand at ausbiz.co/smallcaps23. That's ausbiz.co/smallcaps23. Well, that is it for the COB today. Hope you all have a great evening. Catch up with all those interesting interviews, and we did do quite a lot with UBS live from their UBS conference today. So check those out. Have a great evening, and we'll be back with all the latest news and information starting at 9:30 tomorrow morning.
you.